Welcome everybody to the 40 Finance channel. My name's Jeff. Today we're going to be looking at 3 stocks that are close to their 52-week lows and try to see if we can pick off some values. One of my favorite things to sort through every week is the 52-week lows, just to kind of see which companies are on a downtrend and see if I can find some value there just for research purposes. And that's what I did again this week, and I pulled out 3 stocks that are at least intriguing from a low price standpoint. Okay, first on the list is a company named Tapestry, and Tapestry sells purses, accessories, wallets, things of that nature with the brand names most notably of Coach and Kate Spade. Now, they've had an awful run in Q4 and into Q1, but it's still a solid company, so it makes a really intriguing case to look at from a 52-week low perspective. You can see I highlighted that the 52-week low for this company was $30. We're at $31 right now, which is pretty good if you're searching for value. The PE ratio sits at 12.46 and the forward PE is 10.89. So it's good because we actually have the cost of profits going down, at least projected, into the future. Now, the bull case for Coach and Kate Spade, they're luxury brands, right? In the sense, not as high-end as a Gucci or Louis Vuitton, but they're still pricey. You're not going to see these purses at Target or anything like that. So what we really need here is for sort of consumerism to take over and start to buy these. We also need to see some success from their spring line. Now, I'm no fashion guru, so I have no idea what makes a spring line good or not, but I can tell if it sells well. And that's what we got to hope for out of Coach and Kate Spade if we were to dig into this stock. If you look at the 1-year chart, you can see that Tapestry was actually at $55 about 52 weeks ago. So what we see here is a stock that has potential to get into the 50s, certainly into the 40s, and yet right now sits at $31 because of some down quarters. I think the most intriguing part about this stock, though, is that it does have a dividend, and it's a 4% dividend. So pretty significant for a retail brand stock, and definitely an added bonus to look at this one. Now, if we go to the Tip Ranks dashboard and see how the best performing analysts are ranking Tapestry's potential, you'll see over the next 12 months, it has an average projection of $44, which is great, right? That's $13 return over 12 months plus the dividend that you're earning. Now, of course, it has to hit those numbers. But these analysts are deep into fashion and retail clothing, so they have a good sense. They can't predict the future, and anything can happen, but at least you've got some strong opinions that Tapestry's on the way up. On the high side of projections, the high end for the analyst price targets was $52, and you had a low end of $37. So even if you only hit the low end, you'd still be up about $6 plus whatever dividends you earn. So Tapestry is definitely one if you have a retail feel or if you have a sense of fashion that you want to dig a little deeper in. I think it looks pretty decent on paper. All right, next up we have a popular stock, Baidu, which is basically the Google of China. China obviously has a lot of restrictions for their internet, so Baidu is the only approved search engine for China, and that gives it a massive advantage over any sort of competition in that country. And what's happened to Baidu is it was formerly a high-flying stock. In fact, 52 weeks ago, you were in almost $300 range. And now that you've dropped near the low, the 52-week low was $153. We're $20 above that right now. But what you saw with Baidu is they projected in Q1, they projected a profit margin decrease going into this year. And that combined with the, of course, uncertainty of the Chinese economy had some people just take the stock down substantially, along with several other Chinese internet stocks. Now, from my point of view, the Chinese environment is just getting better across the board. I think the trade war kind of goes away, as I've been saying. It'll take a while. It's not going to be an instant rocket ship. But I think over the next 6 to 8 months, you're going to see the Chinese economy at least stabilize a little bit more. They've added a lot of government policy to sort of spur the economy over there. And any wins with the trade war would, of course, just increase that idea. At the end of the day, Baidu sits at a 13.33 PE ratio. The forward PE right now is 14.84. That takes into account some of the margin concerns they had announced last quarter. And for me, the bull case is pretty simple. It's China resurgence after the trade agreement, and the profit margin concerns evaporate. And I guess what I mean by evaporate is, as the Chinese economy stabilizes a little bit, you have an opportunity for costs to go down. You also have a situation where if the economy gets back up, that profits would increase and thus affect the margin that way. So I think that there's a real potential here. You're just going to have to study the Chinese economic environment and get to understand why these Baidu costs have been going up so high. When we look at the top performing analysts and tip ranks, you see that out of the 5 people that are covering it, we've got 3 holds and 2 buys. I think with those holds, what you're getting right now is nothing's in the clear yet, right? There's no trade war, there's no updates on the trade war. We haven't yet seen Q2 analysis from Baidu to say how are those profit margins coming. So 3 out of 5 are saying hold, 2 are saying buy. The average target price you see here is $204. The the high end of the price targets is $245, and you have the low end at $180. So at $204, you stand to make about $30 over the next 12 months. And this is much more of a long-term play anyway with Baidu. So if you can make $30 in your first 12 months and then of course hold it for the long term, I don't think anyone's arguing that the future of the Chinese economy and Chinese internet stocks, they're very strong. It's just, can you weather the storm for them to get back into the full bull mode? Okay, so number 3 on the list is a company called Green Dot Corporation. GDOT is the ticker symbol. Green Dot is essentially a financial services firm for the underbanked population of America. So when you're talking about prepaid credit cards, money transfers, things of that nature, that's what Green Dot does well. They take people who traditionally don't have a bank because they usually can't meet the minimum requirements as far as like fees for balances under $100, things like that. And they offer them the opportunity to sort of cash their paychecks, put that money on a card, and go about their business. So it's a very underserved market right now. There is a lot of competition, but Green Dot historically has performed pretty well here. They did have a high over the past 52 weeks at $93, and I think that we see with the financial stocks as they are, most of them are starting to creep back up higher now after a very long Q4 and Q1. Right now, we're at a low point of 61.41. That compares to the 52-week low of $56. So you're about $5 off the low. You're seeing a very small uptick in positive price movement. You've got a PE right now of 28.22, a forward PE of 14.75. So costs are coming down. And the real good news for Green Dot right now is they sort of had a mixed quarter in Q4 and Q1. And as a matter of fact, it was actually pretty good. They beat on earnings estimates and they beat on revenue. However, there was some sentiment within their earnings reports that sort of spooked investors and led to this sell-off. I personally didn't see a ton of bad news in there. You can read the reports for yourself, and they have a Q2 earnings report coming out very soon, maybe in the next 7 days. So track that. because if the sentiment changes and analysts get behind this as a stock that has resolved whatever problems they were worried about, then you could be easily back up into a $75, $80 range. When we look at the tip ranks dashboard, we see that 7 buyers out of the best performing analysts, the average price target of $88.29. You have a high bar of $100 and a low ball of 72. So even if you took the low ball at 72, you can be up plus $11 over the next 12 months. And if you're buying into this company for the long term, not only can you make short-term profits, but in my opinion, this sort of financial sector of underserved banking customers is only going to grow as the entire banking world changes. So my opinion as a whole is that Green Dot is a company to keep your eye on anyway. But if you can get it at its 52-week low and you have resources available, it might even be one to invest in today. Okay guys, so those are our 3 stocks near their 52-week lows. Hope you enjoyed this. I think there's some decent values in there, and I'll continue to do one of these videos every month or so. This is the 40 Finance channel. Please like the video, subscribe, share with your friends, and I'll see you on the next one.